Right now, as you're listening to this, there's a very good chance that the money sitting in your bank account isn't actually there. In fact, if every single person in your neighborhood went to the bank tomorrow morning and asked for their cash, the doors would lock, the lights would go out, and the entire system would collapse in minutes. It sounds like a scene from a movie, but it's the literal foundation of the global economy. Most of us were raised to believe that the bank is a safe, friendly place where our money goes to sleep until we need it. We're taught that saving is a virtue and that the bank is our partner in building a future. But what if I told you that the bank's entire business model is actually designed to keep you running on a treadmill that never ends? What if I told you that for a bank to truly thrive, they actually need you to stay just a little bit broke? Now, I'm not saying there's a group of people in suits sitting in a dark room plotting your downfall. It's actually much simpler and more calculated than that. It's just business. But it's a business where the rules are heavily stacked in their favor, and most of us don't even know we're playing the game. Today, we're going to pull back the curtain on the banking industry. We're going to look at the hidden mechanics of how they use your hard-earned money to get rich while leaving you with the crumbs. By the end of this, you'll see your bank statement in a completely different light, and more importantly, you'll know exactly how to flip the script so you can start winning the game they've been playing for centuries.
Let's start with the biggest magic trick in the history of finance: fractional reserve banking. Imagine you walk into your local branch and deposit $1,000. You see the numbers show up on your app, and you feel a sense of security. You think that $1,000 is sitting in a vault with your name on it. But the reality is that the moment you walk out that door, the bank takes about 900 of those dollars and lends it out to someone else. They might use it to fund a car loan, a mortgage, or a business expansion. The bank is required to keep only a tiny fraction of your money on hand. This means they are effectively creating money out of thin air. They take your money, lend it to your neighbor at a high interest rate, and then pay you what? Maybe 0.1% interest? They are using your capital to make a massive profit, and they're giving you a thank you that wouldn't even buy you a cup of coffee at the end of the year.
Think about that for a second. If you tried to do that with your friend's car, if you borrowed their car, rented it out to a stranger for $100 a day, and then gave your friend 10 cents back, they'd call you a criminal. But when a bank does it, it's called liquidity management. The problem isn't just that they're using your money. It's that they are actively incentivized to keep you from doing the same thing. They want your money sitting still. They want it stagnant. Because as long as it's sitting in a savings account, it's their plaything. They are the ones investing in the markets, the real estate, and the businesses that grow wealth. Meanwhile, your money is slowly losing its value.
This brings us to the silent thief, inflation. We've all felt it lately. The price of eggs goes up, gas gets more expensive, and rent climbs higher every year. If you have $10,000 in a savings account, earning almost no interest, and inflation is running at 5 or 6%, you aren't saving money. You are literally losing purchasing power every single day. The bank knows this. They understand that cash is a melting ice cube. That's why they don't keep their own wealth in cash. They put it into assets that grow. But they don't tell you to do that. They send you colorful brochures about high-yield savings accounts that are actually high-loss accounts when you factor in the rising cost of living. They want you to feel safe while your wealth slowly evaporates into their bottom line.
But the real money for banks isn't just in the interest spread, it's in the traps. Have you ever noticed how easy it is to get a credit card? You get offers in the mail every week. They offer you points, miles, and cash back. It feels like they're giving you free money. But ask yourself, why would a multi-billion-dollar corporation give you anything for free? It's because credit cards are the ultimate bait. They are designed to exploit human psychology. They know that when we swipe a piece of plastic, our brains don't register the pain of spending the same way they do when we hand over physical cash. They want you to overspend. They want you to carry a balance. Why? Because the interest rates on credit cards are often 20, 25, or even 30%. That is a mathematical trap that is incredibly hard to escape. Once you're paying interest on your debt, you aren't just paying for the things you bought. You are paying a life tax directly to the bank. You are working 40 hours a week,
but a huge chunk of those hours belongs to them. You are essentially an unpaid employee for the bank's shareholders. And then there are the fees. The dreaded overdraft fee is perhaps the most ironic part of the entire banking system. It is a fee charged to people because they don't have enough money. Think about the logic there. If you have $0 and you accidentally spend $5, the bank charges you $35 as a penalty. It's a multi-billion-dollar revenue stream that targets the people who can least afford it. It's a poverty tax. The bank isn't helping you manage your money in that moment. They are capitalizing on a mistake. They make more money when you fail than when you succeed. If everyone managed their money perfectly, paid off their cards every month, and never overran their accounts, the banking industry would lose billions of dollars overnight. Their growth is literally fueled by our financial struggles.
So, why don't they teach us this in school? Why is financial literacy so absent from our education system? It's because a financially literate population is bad for the banking business. If everyone understood how to invest in low-cost index funds, how to use debt as a tool rather than a crutch, and how to hedge against inflation, the banks would lose their grip. They want you to stay in the cycle of earn, deposit, spend, borrow. They want you to believe that the only way to buy a house or a car is to sign your life away for 30 years. They want you to see them as the gatekeepers of your dreams.
But here's the twist. You don't have to play their game by their rules. The moment you realize that the bank is a tool and not a vault, everything changes. You have to start thinking like the bank. How does a bank make money? They move money from where it is to where it earns more. You can do the same. Instead of letting your extra cash sit and rot in a savings account, you put it to work. You invest in assets that appreciate. You become the lender by investing in the market or real estate. You stop being the person who pays the interest and start being the person who collects it. The banks secretly want you to stay broke because a broke person is a profitable customer. A person who lives paycheck to paycheck is more likely to use credit, more likely to pay fees, and more likely to stay dependent on the system. But a person with a peace of mind fund, a person with a diversified portfolio, and a person with zero consumer debt is a threat to their profit margins. That person is free.
Imagine what your life would look like if you weren't giving away a quarter of your income to interest payments every month. Imagine if that money was staying in your pocket, compounding and growing for your future instead of someone else's. That is the reality that the banking industry doesn't want you to visualize. They want you focused on the next convenient loan or the next rewards card. They want you to stay focused on the monthly payment, not the total cost. The good news is that the door is wide open. You can decide today to stop being a source of passive income for a bank. You can start by treating your savings as a seed for investment rather than a safety net that never grows. You can educate yourself on the difference between good debt that buys assets and bad debt that buys liabilities. You can take control of your financial narrative.
The bank isn't your friend, but it doesn't have to be your enemy either. It can be a service you use, as long as you're the one in the driver's seat. Use their technology, use their convenience, but never, ever trust them to look out for your best interests. Their loyalty is to their bottom line, and your loyalty should be to yours. It's time to stop being the fuel for their engine and start building an engine of your own. Because the greatest way to win a game that's rigged against you is to stop playing by the rules they wrote and start writing your own. Your future self is waiting for you to make that choice. Don't let the bank hold your dreams hostage for another day. Take your power back, take your money back, and start building the life you were actually meant to live.